Not audible. You have to unmute.
Samisa, you're not.
Am I audible now?
Yes.
Good evening, one and all, respected Central Council members and Chairman of the Committee on Commercial Laws Economic Advisory and NPO Cooperative of ICAI, today's eminent speaker, Advocate Harsha Totuka, and all the august audience. I am Samir Ledda, ex-chairman of Pune ICAI and moderator of webinar, as well as coordinator between all of you audience and today's eminent speaker. We are delighted to welcome you all in webinar being organized by Committee on Commercial Law, Economic Advisory and NPO Cooperative of ICAI. It's my pleasure to be moderator in your law series 51, webinar on new labor codes, impact on business and relevance for CAs on 4th April 2004, today, being organized by Committee on Commercial Laws, Economic Advisory and NPO Cooperative ICAI. In short while we will start this webinar, I would like to apprise you about this committee. This committee is focused to encourage chartered accountants to shape strategy and policy that unlocks economic, financial and social value while combining analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge, dissemination, inputs to regulators on policy formulations, to develop and publish technical guidance, background materials, etc., and to create awareness for professional opportunities for chartered accountants in commercial laws, economic advisory, and NPO cooperatives. At present, very few CA members are working in this field of labor laws, etc. I personally congratulate Chairman Sir and the Central Council members, CA Chitresh Sir, for taking this best initiative from this committee. Now, I will like to introduce our Chairman Sir to all of you. Chairman of this committee is C. Chandrasekhar Chitresh Sir, who is a Central Council member by education. He is BCom, LLB, and for FCA. He is senior partner in CV Chitresh and Company. A member of Central Council since 2019-22 till today. He is chairman of Ethical Board Standard Board for 23-24, chairman of Directors Committee 22-23, chairman of Peer Review Board 22-23, treasurer of MCCI for a decade and presently chairman of Directors Committee of the Chamber, member Executive Committee of MCCI. He was nominated on Cost Accounting Standards Board of ICMA, was chairman of Pune branch of ICI, former lecturer at college and management institutions, authorized several articles in Taxman, CA, CMA journals and Economic Times, Times of India, Arthamantan and many other newspapers. He is authors to one user guide on tax audit, VDIS, service tax for professionals. Awarded prize for best article in Pune Chapters Association Society Journal. Lecturers at Commerce College and Management courses. Delivers several lectures at seminars and conferences for professional and public, including Vasant Vyakhanmala. He specializes in direct tax, drafting and convincing corporate counseling. Welcome, sir, on behalf of all the participants, and I request you for your opening remarks. Over to you, sir.
Thank you, Samir. I welcome audience and the speaker, Harsha, for today's webcast. Friends, as you are aware, this committee deals with other commercial laws where the presence of chartered accountants is very thin. And we believe that audit and other area of practice like taxation, etc., commands onerous responsibility. But then there are various other laws where, since the presence of professionals is thin, it provides better opportunity for the purpose of rendering services, professionalizing the field, and earning good amount of remuneration. Out of various fields, one field is labor laws, and where the committee has decided to focus. The reason for focusing on this particular field are threefold. Firstly, there is plethora of labor laws, and replacing those labor laws, this government has passed labor code, and there are only 4 labor codes where the entire gamut of labor laws is contained. So if at all you want to do advisory services, you want to do compliances, you have to only study these 4 labor codes and you will understand the gamut. That is number one. Secondly, as far as the entire compliance of this particular labor code is concerned, it is online. It is faceless. So as a chartered accountants, those of us who are dealing in maybe income tax, maybe GST, maybe corporate laws, we are already doing these compliances on online based mode, and therefore we are used to this online compliances and the nitty-gritties of operating the computer. In this background, when the labor laws also are proposed to be online for the purpose of compliance, I think the transition would be very easy for chartered accountants. And thirdly, when the law is there, the compliance is online, I'm sure that the practice will be centered around the provisions of law rather than extraneous factors, because anybody who has to issue notice, who has to take decision, will have to do so in a transparent manner. And in the transparent environment, the profession thrives, the professionals make good headway in this particular field. So labor laws, we want to be more and more, as far as chartered accountants are concerned, to be entering this field. And as I said, that today the code has been enacted by the government. Now, what beholds operation of the code is the date to be notified. Once the date is notified, thereafter this code will become effective, and the whole field of labor laws will be governed by these 4 labor codes. Of course, as a chartered accountant, as you will appreciate, that our services are not confined only to compliance of those labor codes, but we can take a view on the entire gamut of employee portfolio. So maybe policies for the purpose of recruitment, retention, ESOP, how to incentivize people, all those things can be combined, and we would be in position to give advisory services. Of course, while giving those advisory services, we should be mindful of what are the mandatory prescriptions under law, and that is how we need to know the labor laws. Today, we are very fortunate that we have with us Harsha, who has earlier also been on our dais. She has explained us the provisions relating to these labor codes. And she has studied this labor code from very close quarters. Also, she practices in this area. So presently also, whatever are the provisions, she is aware. So not a better person than Harsha would have been with us to take us through these provisions. Of course, I'm sure that to study in depth these 4 labor codes, maybe 2 hours are very limited period, but we want you to make a preface so that once she tells us the preface, wherever we are interested, maybe we can have a whole day seminar, or we can follow up it with a course on labor laws. But before we do so, let the chartered accountant friends understand what the gamut of this labor laws is, so that with this background, we thought that as a precursor, we should start. And Harsha, you would be glad to know that this committee is starting this financial year with your initial lecture. So we are very fortunate that a learned person like you has agreed to join here. CA Prakash Sharma, who is vice chairman, who was also supposed to join, who coordinated with you. However, he is engaged in bank audit, and therefore he told that it is likely that there would be a board meeting and he may be occupied. If he gets free earlier, he would have joined. It appears that he has not joined. The meeting still continues, but he has asked me to provide his compliments to you. And I'm sure that today's your presence is very heartening, and you will continue to shower your patronage on our committee and our programs. So welcome to you, and over to Samir for further proceedings. Thank you.
Thank you, Chitra sir, for your address. Now it's my pleasure to introduce to us today's our speaker, Advocate Harsha Totuka. Harsha Madam, welcome on behalf of all the participants and this committee. She is an advocate by professional and currently partner at Chair Amrut Harsha practice in the field of corporate commercial laws. She also advises on complex legal issues related to labor laws. She has extensive experience in legal structuring of diverse types of commercial arrangements and drafting commercial contracts and documentation. Her practice also covers conducting legal due diligence, providing overall transactional support, and advising IPO-bound companies. She has advised clients from diverse sectors ranging from hospitality, healthcare, manufacturing to banking and finance. Harsha is an alumnus of ILS Law College, Pune. Before I hand over to today's speaker, there is two announcement for the audience. Question and answer you have to write in special given tab, and then at last I will take the question and answer session for all of you. Meanwhile, you can write questions in the specific given tab. Webinar on interest on will be drafting on 11th April 2024 between 5 to 7 will be organized by this committee again for all of you. With this, I would like to welcome Harsha. And Harsha, please take the charge of your session.
Thank you, Samirji, and thank you, Chitle sir. And I am honored that the committee has chosen to start this financial year with a session on labor law and has invited me to be as the speaker. I'll just take a moment to share the presentation and then we will start. I hope my screen is visible, Samirji.
Yes, ma'am, your screen is visible.
Sure, thank you. So a very good evening to everyone. And today's session, Chitle sir has already put into perspective as to why we are having this session and what is the relevance of this session for chartered accountants and what new professional opportunities this new labor laws, this new labor regime can bring for all of us. So to start with, I'll just show a quote by Shri Arvind Pangadia, former chairperson of Niti Aayog, as to what is the complex labor situation in India. He says that the labor law web is so complex, and as you grow, multiple labor laws apply to you, and this incentivize the employers to grow because more laws apply, and it's very difficult. So in the present labor regime, there are many challenges. There are around 44 central labor laws. And because labor is a concurrent list item, both states as well as center make laws on labor or labor welfare. And because of that, there are more than 200 state labor laws. And in all these laws, there are never ending compliances. There are more than 100 filings which have to be done. There are more than 900 compliances which have to be done. You must have seen that every labor law says that the rules have to be published at the entrance. You have to put what are your maternity policy. So if you start complying with all of this, there are more than 900 compliance. This has in a way also hampered India's ease of doing business ranking. We've not been able to rise up the ladder because of this one reason. And in recent years, India has seen a dip in manufacturing sector jobs. So this is also one of the reasons that there is a dip in jobs, and also there is an exit barrier. It's perceived that in India it's easy to start a business, easy to put up a factory, but it is very closed. It's very difficult to close that unit, and it takes a lot of time. And because of this, a lot of time foreign investors or even domestic investors are very not keen on putting their money or starting something in India. And to overcome these challenges, first time in 2002, there was a commission which suggested that we should group all these labor laws into 4 simple code basis the subject area. and this will simplify the entire regime. Also, many of these labor laws are very old. They are pre-independent uh, era laws, and because of that, there is a need for updating these laws. Like you must have seen in COVID, everyone was working from home. So this work from home concept is not addressed in labor laws. Similarly, we have all become used to ordering food through Zomato, through Swiggy, or taking a Uber or a Ola to work. Now, these drivers who drive for Ola, Uber, or these delivery boys, whether they are employees or not, they are called gig workers. But the current labor laws don't address their situation and or their welfare measures. So there's a emerging need to capture these new form of labor. Apart from that, the MSME sector also requires some flexibility. So there is a equilibrium which has to be drawn between the needs or protection given to labor as well as freedom given to employer to run their business. We don't want a situation where employers are able to easily exploit uh, their employees, and then the labor laws have to kick in to protect them. But at the same time, they can't be so stringent that a businessman can't run his business in his own way. So to find that equilibrium and give a flexibility, also there was a need to because the economy has changed. It's been years since these labor laws were framed, and the mindset and the requirements have changed. So there is a flexibility which is required. And then, as I said, easy exit for investors, domestic or foreign. That was also a requirement. This would encourage growth and investment, and a 5 trillion economy dream can come true if these labor laws are implemented successfully. And with this idea, in 2014, the NDA government firstly took this initiative as a part of their election manifesto. And in this last term, they have been able to codify these laws, and precedent assent has been received. Now, what remains is the effective date being notified. And they have, out of 44, 29 labor laws have been merged into 4 codes. Now, these codes are code on wages. Now, this code on wages, what it covers is what would be the time of wage, how the wage has to be paid, what are the deductions you can make from wages. So, payment of wages is covered, equal remuneration to men and women, that is a part of this code on wages, then payment of statutory bonus and minimum wages. So, all these laws have been subsumed in code on wages. This was passed in 2019 itself. Then the second code is Code on Occupational Safety, Health and Working Condition. We are calling in short the OSH code. This covers the existing Factories Act, Contract Labor Regulation Act, Building and Other Construction Workers Act. Then there is a code on social security. So all social security related previous acts such as Provident Fund, employee state insurance, maternity benefit, payment of gratuity, all this is covered in this code. And then last is the code on industrial relation. Now what this code covers is the relationship between trade union and the industry, the Industrial Disputes Act, and also the Industrial Employment Standing Order Act. So these are, I've just named few things, but in total there are 29 laws which are being merged in these 4 codes. In terms of timeline, in 2019, the Code on Wages was passed, and the rest of the 3 codes were passed in 2020 by the Parliament. They received the President assent thereafter. The central government had framed a draft rules and had put up these draft rules in public domain. Most of these states, by 2023, most of these states have finished drafting their rules because, as I said, labor law is a concurrent subject. So for a factory which is situated, let's say in Rajasthan, while the law is same, the code on wages or the industrial relation code, but the rules of Rajasthan state government will apply. Whereas if it's a public sector, central public sector and PSU, which is there in Rajasthan, then the central rules will apply. So accordingly, there's a concept of appropriate government. So state rules also play an important role. So by now, all the states have almost finished making rules, draft rules at least. And as and when the date is notified, these rules and the law will come into force. We are expecting, because the general election is, in April and May, elections will be held. So depending on the result of the election and soon after election, we can expect that these labor laws can be put into force. So this is the status of rules in state and UTs. I think Karnataka is the only state which has made final rules, but most of the states have made draft rules, and these draft rules are already in public domain. And I feel that only 10-20% change would come. Draft rules would more or less be the same. So if one wants to study that in their state, what will be the changes? So you can study the draft rules of your state and you can get an idea. Now, in today's seminar, what we will be discussing are the general provision, because there is a variety of labor or employment. There are special, because, for example, for a motor transport employee, that is a driver who drives the cars, for them, you can't have a timing as to, 9 to 5 or 48 hours in a week. Their needs are different. Similarly, for journalists or for cinema workers, the needs are different. For them, there are special provisions in these labor laws. Today, we'll not be discussing those. We'll be discussing the general provision which apply to general employees. But if one wants to advise any business or see what are applicable to these type of employees, there are special chapters in these labor laws to take care of that. Now, first, let's look at the wage. Now, wage is at the epicenter of entire labor laws, the concept of wage, because what the employer gives in return of the services from employee is what is the wages. An employee is working for the wages with the employer. So in the current labor laws, there are various nomenclatures given to wage. Some call it basic wage, somewhere it's written remuneration, somewhere it's wage, somewhere it's salary. And every law has its own definition of wages. It's very difficult for a businessman or a professional to keep a tab that what is the wage for gratuity, what is the wage for ESI. For every contribution, you have to have separate sheets calculating all of that. So it is a lot of, there's a lot of ambiguity around it. Then, because these labor laws are so old, there are various conflicting judgments. One high court has to say one thing, the other high court says another thing. So it is very difficult to keep a tab as to what is the right interpretation. And apart from that, in the definition of wages, there have been various vague exclusion. For example, any other allowance is not a part of wages in certain laws. So what do you mean by any other allowance? Can any allowance be any other allowance? So these are certain ambiguities which have hampered the growth of business and which have caused some problems to business. So in these new labor law, what one thing they have done is they have uniformized the definition of wage. There is single definition which is used in all four codes. So wage is just, there is one definition, it is used across all labor laws now. Now, this definition is very important. It has 5 layers attached to it. First is the means part. Second layer is the includes part. These both are visible on my screen right now. We will be discussing the third part, which is important. That is the excludes part. What is not part of wages? Fourth is the 50% rule, which has caused quite a controversy. And sixth, the last is remuneration in kind. Fifth, the last. So let us understand these one by one. So in the means part, they have widely and broadly worded the means part. So whatever you can think of that the employer gives to the employee is capable of being covered here. In the includes part, it's very simple, basic, dearness, and retaining allowance. Straightforward includes part. These 3 parts will be included while computing wages. Now, the excludes part. So this exclude part is 11 line items have been given. Unlike the previous regime, there are no subjective line items such as any other allowance. They have specifically named that house rent allowance is excluded, conveyance allowance is excluded, overtime allowance is excluded. So there is no subjective item and which creates an ambiguity as to what is included, what is not included there. So these 11 items are not part of wages. Some of them are very familiar, like statutory bonus, HRA. We've seen them in previous laws, and some new items have also been added here. So these items are important. Now, the government has also created a deeming provision by this 50% rule. So customarily, what happens is that there is a concept of CTC. And in CTC, whatever amount is to be given to employee by way of salary is broken into many parts. The purpose is sometimes tax planning, better tax planning for employee. Sometimes the purpose is so that PF and ESI contribution by employer is reduced or is, capped to a certain amount. So for that purpose, there is a lot of breakdown of salary into various allowances and components. And the government is trying to plug this loophole. So to plug this loophole, what they have said is that the previous items, this 11 items we have seen on the previous slide, the first 9 items, if the total of these 9 items is more than 50% of your salary, then whatever is the excess, we will deem it to be wages. So in other words, what they're trying to say is that 50%, at least at the 50% of your gross salary, you will have to pay social security contributions. You cannot evade them by giving them different names and putting them under different heads. Now, this will impact the current industry practice. So a lot of business organizations are saying that at least for the first few years of these labor codes, this 50% should be 75, 80, 60%. But because it's written in the law, this cannot be changed by way of rules also. Amendment in law is required for that. But currently the law says that it's a 50% rule. Now, to understand this, I've taken a simple example. Let's say the basic salary is 40 rupees. The exclusion, that is HRA, and let's say conveyance allowance, is 60 rupees. And then total salary, what is being given to is 100 rupees. As per current regime, if someone was to calculate provident fund at the rate of 12%, they would do it the basic wages, that is 40. They would say that HRA and conveyance is excluded because allowances are not included. But because of this 50% rule, the 50% of 100 rupees would be 50. And because there is rupees 10 extra in the allowance part, so the wages have to be 40 plus 10, that is 50. And your PF will be calculated on 50 and not 40. So this is the difference this 50% rule is making. Now, this will impact a lot of CTC structure, and they'll have to be reviewed as to whether we're complying with the 50% rule or not. Now, the last layer to this definition of wages is remuneration in kind. All the chartered accountants are very familiar that how taxation of remuneration in kind as perquisite is done. And but from labor point of view, giving whether food coupons such as Sodexo coupons, free meals, driver vehicle given by the organization, whether the value of these is to be included in the terms wages or not is a very important question. Because if the value of these is to be included in the term wages, then your contributions, social security contributions and everything is calculated on the wages. Your gratuity is calculated on wages. So it has an impact on that and ultimately a financial burden for the company. So this is what the new law is. There are 3 specific exclusions that rent-free accommodation, light, water and medical attendant will not be included, and any other amenity as may be notified. So for the issues that I mentioned in my slide, maybe we can expect some notification from the government as to what is excluded. But otherwise, remuneration in kind up to 50% or 15% of total wages is included in the term wages. So this is what the new definition of wages is. Now, what I will try to do is, we'll try to understand the comparison between the old regime and the current regime for each of the law that is generally there for wages. First is minimum wages. So you must be aware that in India, every state has its own minimum wage law. Each year there is a list, there is a notification which comes that this is the minimum wage for, let's say, state of Rajasthan. Now, in the state of Rajasthan, around 6,000 rupees is the minimum wages for an unskilled worker. So let's say if I have to hire someone and I cannot hire someone below minimum wages. I have to pay at least 6,000 rupees per month to that person. Now, if I break his payment into basic wages, HRA, conveyance allowance, etc., and I total pay him 6,000, till date I was complying with Minimum Wages Act. I was still paying him 6,000. But going forward, because HRA is not included in the definition of wage, if I pay him 6,000 in terms of after breaking it up in many things, I am not complying with minimum wages. So what the new requirement is that your basic wage must be above minimum wages. If it is not the case, then you're not complying with the provisions of new labor codes regarding minimum wages. So there's a requirement that we review the CTC structure. We ensure that our minimum wages are more than our basic pay is more than minimum wages. So there's no gap in compliance. Next is gratuity. So currently in the industry practices that gratuity is paid to person who completes 5 years of service. It's paid on basic plus DA. Whatever your allowances are in CTC, they're not included for the purpose of calculating gratuity. For gratuity, many organizations formulate a trust. They take some insurance policy from LIC for payment of gratuity. So actuarial valuations and premium paid to LIC is also calculated on the basis of basic plus DA. But because the definition of wage is changing, now not every allowance is excluded for the purpose of wages. Only those 11 items are excluded. So apart from that, if you're paying anything by the name of, let's say, special allowance or children education allowance, they are not excluded. They'll be counted as wages and gratuity will be paid on that. So this has a huge financial implication for the business, and the actuarial valuations also have to be relooked. And another problem which the organizations are facing is that they are saying that this provision will have a retrospective effect. What they're demanding, organizations like CII, FICCI, they've written to the government that this provision should be applicable for employees who are joining after labor codes have come into effect. Otherwise, what will happen is that someone who has served for last 4 years, his contribution to LIC or to trust has gone on the basis of basic plus DA. But in the 5th year after labor laws kick in, he has to be paid gratuity on the basis of the new definition. So the financial burden company will have to bear suddenly. So they are not ready for it. And because of that, this retrospective position puts company in a difficult situation. So the government is also considering, that's what the public reports say, that they're considering whether to restrict this from the new employee point of view. But currently, as per the new law, it will apply to all employees. Now, third here is the employee state insurance contribution. So there's a part which is deducted from the salary of the employee, and also there's a contribution which the employer pays from its own pocket. So currently, this is paid on gross wages. All allowances are included. That's how the definition is structured. But going forward, for example, HRA is excluded. So the contribution will go down because HRA is not part of wages anymore. So the contribution will not be calculated on HRA. Then comes the bonus. Now, this is statutory bonus, which is currently payable under the Payment of Bonus Act. This is not the performance-linked variable bonus, which is paid by organization. So this bonus currently paid just like gratuity on basic plus DA. So what the law says that every employee who's earning less than 21,000 rupees per month, they have to be paid bonus at the rate of 8.33% minimum and 20% maximum. So minimum is 1 month salary bonus has to be paid. So currently it is paid at basic plus DA. And just like gratuity, how other allowances will get included, this will also increase. So again, financially, it will be more for the employers, that more bonus has to be paid. Retrenchment compensation will decrease. Now, retrenchment compensation is compensation which is paid to a worker in case the employer is terminating his employment. It's paid at the rate of 15 days of salary for every year of service the worker has completed. So currently it is calculated at gross, but because there is a single definition in all laws, so various allowances, HRA, conveyance, etc., they'll be excluded while calculating retrenchment compensation. So the retrenchment compensation, if you calculate as per the new definition, it'll be less as compared to the old one. Now, last here is the Provident Fund. Now, the situation of Provident Fund is more complex as per the earlier slides we have discussed. So currently the industry practices to pay Provident Fund on basic wages plus dearness allowance. It's paid at the rate of 12%, and overtime, HRA and any other allowances are excluded while calculating Provident Fund contribution. Now in 2019, there was a Supreme Court judgment which changed this interpretation drastically. What the Supreme Court said is that if you're giving, let's say, special allowance or any other allowance by whatever special name you may call, if it's given to all your employees, if it's given to them every month, then it is as good as basic wages. The purpose of allowance it will not be deducted or excluded while calculating Provident Fund. Because of this new interpretation given by Supreme Court, there was a drastic change industry-wide. Even the PF department became more active, conducted many inspections. In my office, there were many clients who had a demand of 2 to 3 crore in terms of PF contribution because of this judgment. The auditors were seeking opinion as to how to determine contingent liability because of this judgment, because there is no limitation as to how, there is no 5-year, 6-year limitation, because this judgment gave an interpretation. The law hasn't changed. So the new law is in line with this judgment. And they say that from gross salary, we will only deduct the 11 items that were shown in the slide earlier. And then whatever is the salary minus those items, then you have to pay Provident Fund at the rate of 10%, not 12%. And for specific establishment, they might notify a certain rate of 12%. We would recall that in COVID also the rate was lowered to 10% to give some relief. So now I think the new rate would be 10%, and for certain establishment, it could be 12%. So there will be an implication. The wage for calculation is increasing, but the rate is decreasing by 2%. So there could be a set of increase and decrease also here. So let us have an illustration to understand what is the implication of this new definition of wages in terms of numbers. So I've taken a very basic CTC example where basic salary is 10,000. We are giving a 40% HRA of 4,000. There's a conveyance allowance, LTA and uniform allowance. And the balancing figure of special allowance, 13,000. That is the total salary of a person. And currently, if you calculate the PF contribution, so it will be it's calculated at the rate of 12% on the basic salary of 10,000. It comes to 1,200. But as per the new law, The uniform allowance, the special allowance, and LTA also gets included because it's not listed in the excluded part. Only HRA conveyance will be excluded. So the EPF contribution is increasing to 1680 rupees. Statutory bonus remains the same because there is a limit on it. ESI is decreasing because HRA is now getting excluded. And wages for gratuities, just like provident fund, it is also becoming from 10,000, it is becoming 14,000 because leave, travel, uniform, special allowances getting included. So in net, CTC is increasing, but take home is decreasing. So from employer's point of view, their CTC is increasing, financial burdens are increasing, but from employee point of view, their take home is decreasing. So this is the impact of the change in definition of wages here. If anyone has any questions, we will take that towards the end of the session. Now let's turn our attention to another important aspect, that is applicability and registration. Now we have various labor laws, and it is very difficult for a business to keep a track as to where all they have to take a registration, which all laws are applicable. So a lot of times while doing due diligence for IPO or for another transaction, we come across where many businesses have not taken registration in less. PFESI everyone takes mostly, but there are lesser known labor laws. For example, BOCW says, labor welfare says, there is professional tax in certain state, then there are shops and establishment acts in certain state. So there a lot of time registrations are not taken. So now the new regime is, there is single registration on Shram Suvidha portal. And just like how in income tax we have PAN and MCA we have SIN number, there'll be a LIN, labor identification number, which is given to all the organizations. The existing organizations which already have multiple registrations, they can update their detail on Shram Suvidha portal and they'll be issued a new LIN. And for all the labor code, there is just single annual unified return online which have to be filed. Now you don't have to file multiple returns under multiple laws on different dates. There's just one return which has to be filed. So just like, let's say GST or income tax, they're trying to do a consolidation of single registration, single return. Now, before decoding applicability, it's very important to understand certain important concepts. So first of these concepts is employee versus worker. So in general parlance, we see that blue collar persons are employee and white collar persons are blue collar employees are worker and white collar are employee. But in labor law, this terminology is very important because certain laws apply if you have certain number of workers. Certain laws apply if you have certain number of employees. So employee is a bigger subset. Every worker is an employee also. And workers have been granted certain extra rights in these labor laws. And you'll be amazed that the more than 50% of India's working population is earning less than 10,000 rupees. So, they're employed at that grassroots level where their rights need to be protected more. And very few, I think only 1 to 2% of workers or the employees are earning more than 50,000. So the white collar ones are very less in numbers and their protection is not needed that much. So let's understand who is not a worker. And everyone who's not a worker is still an employee, but not a worker. So everyone who is engaged in managerial or administrative capacity is not a worker. Second, whoever is engaged as a supervisor but is earning more than 18,000 rupees per month is not a worker. So it's important to mind that this wage limit of 18,000 is for supervisory capacity. It's not for managerial or administrative capacity. And similarly, let's say you have a cleaning staff and the cleaning staff is earning 20,000 rupees per month. he's still a worker. This wage limit is only for supervisor. But if there's a supervisor of cleaning staff, he's earning 20,000 per month, he's not a worker. And it's a very interesting, let me tell you that in case of IT companies engage a lot of engineers, graduate engineers who work as software developers. A lot of cases have gone to the court where the court has said that the software developer is a worker, irrespective that he's earning 75,000 per month or 50,000 per month, because he's not administrative, he's not managerial, and he's not supervisor. He's just a person developing software at the root level for you. And therefore, he's a worker and he cannot be retrenched without retrenchment compensation. So this is very important, and that's why all businesses must know and do a head count as to how many workers they have in their organization and how many non-worker employees they have in their organization. Now, another concept in applicability is establishment. Currently, we have shops and establishment in every state, and there the word shop is defined, there the word commercial establishment is defined. Now, they've introduced a new definition of establishment in the law, in these labor codes itself. Now, if you read the definition, it includes industry, trade, business, manufacture. A new word, occupation, has been inserted. Now, this word gives a lot of width to this definition. Now, a CA's office, a lawyer's office, there is no industry, there is no trade, there is no business because it's a profession. But there is occupation. And because of this word occupation, now a lawyer's office, a CA's office, it is an establishment for these labor laws. And these labor laws apply on us also. And we have to comply them. We have to pay the wages on the date given in the labor law. We can't make deductions from the wages. We have to give our employees and workers also have rights which are given there. So therefore, it's very important that we study these labor laws from applicability point of view in our own office also. And there was a question that what happens to NGOs? NGOs don't do business, they're doing charitable activity. They have a 12AA registration also. From income tax also, they are exempt subject to certain conditions. But in the previous regime also, the courts have held that although the purpose is not business and it's a charitable activity, but because there is a systematic activity and there is employer-employee relationship, so in most of the labor laws, NGOs are also covered. So this word establishment would also include NGOs in my view. Now, coming to applicability, there is a threshold regarding number of employees in certain laws. Now, the idea behind is that they recognize that if you have less than 10, 20 employees, then you're unorganized sector. You're not big enough that you can take the burden of labor law compliances. And therefore, from most of the labor laws, you're exempt. But if you're having more than such number of workers or employees, then you're a recognized or you're a recognized business. You can take this burden. These labor laws apply. So in the wage code, as I said, that payment of wages and minimum wages and equal remuneration is subsumed in the wage code. So this applies on anyone who falls within the definition of establishment. Even if you have one employee, you have to comply with these laws. So as I said, a CA office, a lawyer office, they'll have to comply with this. We cannot hire someone below minimum wages. We have to make payment of wages in terms of the rules given here. For statutory bonus, only establishments having more than 20 employees will have to give statutory bonus. And also there is an exemption to universities, NGOs and educational institutions because they are not for profit. So there is no profit and no bonus out of that profit. And in terms of minimum wages, one thing in the current regime, there is a scheduled and minimum wages law only apply to those scheduled businesses. Now they've done away with this. What the government is saying that minimum wages is a fundamental right of a human being. Roti, kapda or makan. For that, you need minimum wages. And therefore, it applies on everyone, there is no exception to it. The OSH code, which talks about safety condition, health, care of worker, it applies to every establishment having more than 10 workers. Now the word here is workers and not employee. So whoever, if you have 10 people who qualify as worker, then this apply. And in every factory having more than 10 workers, this apply. The social security code for EPF, there is a limit of 20 employee. Till 20 employees, it doesn't apply. If you have more than 20, it applies. For ESI, there is a limit of 10 employee. For gratuity and maternity benefit, if you're a factory, it applies. If you're a shop establishment having more than 10 employees, then it applies. And you'll be amazed to know that more than 79% of persons are employed in establishment having less than 10 workers. So by these limits of 10, 20, more than 79% establishments are getting exempted. So in terms of the entire nation, the pie is very less on which these labor laws are applying. And the industrial relation code is applicable on whoever qualifies as an industry. There's a definition, we'll discuss that in the coming slides. Now, in the previous slide, we saw applicability in terms of number of employees. Now, there's also a threshold regarding salary, basis of salary. So currently, the Payment of Wages Act is applicable for persons who earn less than 24,000 rupees per month. But in the new law, there is no such wage. So even if you're the CFO of the company, you're earning 1 lakh rupee per month, your payment of wages has to be as per the terms. It will not be governed by the contract. Rather, it will be governed by the social pay code on wages 2019. For bonus, EPF and ESI, currently there is a threshold. For bonus, it's 21,000. EPF, there is 15,000. ESI, 21,000. In the new law, there is a provision that the government will prescribe the threshold by way of a notification. So it's expected that similar or some higher threshold will be prescribed as and when the effective date is notified. Now, as we spoke that industrial relation code applies on the term industry, on industry. Now, there's a definition of industry. In the previous law, there was a very simple 2-line definition. In the new law, there is a complex definition which has includes, excludes part also. Now, there are specific exclusion given to charitable organization and the institutions, for example, universities or school and colleges, because they are run in trust and societies, they will not qualify as industry. Now, this is very important because now if a school terminates the employment of teacher, they will not be entitled to retrenchment compensation anymore because it's not an industry. IR code does not apply. There is no retrenchment compensation. So because of the philanthropic nature of these charitable organizations, they have given exemption to them from the definition of industry. Earlier, the judgments were different. There was a Supreme Court judgment of Bangalore water supply. And as per the previous definition, they said even if you're an NGO, and you carry a systematic activity, you will qualify as an industry. So now the regime is changing. The term factory has been defined in the OSH code, and the limit of employee or workers have been doubled. Earlier it was 10, now with aid of power, if you employ more than 20, you are a factory, and without aid of power, instead of 20, it's become 40. So a lot of small factories don't qualify as factory as per the new laws, and they will get some relaxation. Another troublesome provision for the businesses was standing order. So if till the time you were having 99 employees, it was fine. The moment you had 100 employees, you had to get your standing order certified from Labor Authority. Now, it was a cumbersome process, and both the representative from the employer side, employee side would go, there would be negotiation. These standing orders it was like a rules and regulation of it was like a rules and regulation of internal rules and regulation of the company, how disciplinary proceedings will be conducted, what are the grounds on which disciplinary proceeding can be initiated, what are the rule for leaves. All this was written in the standing order. Now, instead of 100, the government has increased the threshold to 300. So up till you reach the limit of 300 workers, you don't have to get your standing order certified. After that, certification has to be done. Government has also prescribed model standing orders for service sector, for manufacturing sector. The model draft has been prescribed. Now, in the service sector model standing order, they've also given recognition to work from home concept, which we all became used to during the COVID times. And I think in IT companies still going on. There's a hybrid work from home as well as 2 days work from office kind of thing going on. And they've also given flexible working hours to IT sector. They've recognized all of that and put that in writing in the model standing orders. Another controversial topic which coming here is apprentice. So normally, as per the judgments of Supreme Court, apprentice is not included in the general meaning of the word employee. And because it's not included there, labor laws don't apply an apprentice. But there were specific amendments in laws like ESI where they said that even trainees or apprentice would be included in the term employee. So there were specific explanations added to those laws. And because of that, ESI contribution had to be paid there. But in the current law, there is a definition, and they only exclude apprentice engaged under Apprentice Act 1961. So only these apprentices have been excluded. So what happens to all other apprentices is still a gray area. Whether management trainees or CA articles, what will be their treatment? Will they be treated as employees of CA firms? Will ESI contribution have to be paid there? So that has become a gray area. So, many organizations are writing to the government to clarify this, come up with rules and notifications to clarify the air around it. Now, we've understood applicability and registration. Now, let's turn our attention to another aspect, which is hire and fire. Now, in many countries, as per the International Labour Organization, which is a part of UN, only certain countries like India, Pakistan, Thailand, they have rules where you have to take prior permission of the government before you close or hire, fire certain where you close, or you have to take permission from the government before you close your industry or hire or fire certain employees. In most of the developed nations and other countries, there's no such requirement. Only intimation has to be given to authorities or workmen regarding closure, and you don't have to take any prior permission from them. Now, in the current regime, up till you are 100 workers, you don't have to take prior permissions. You have to give notice, you have to give compensation, and you can close your business or hire or fire an employee. After you cross the limit of 100, the requirement of prior permission kicks in. There are certain states like Rajasthan, and there are southern states also, which have already amended this provision, and instead of 100, there's a limit of 300. Now, these new labor laws, they state that pan-India, the limit is 300. So till the time you're a big business, you have 300 workers, you don't need prior permission. The requirement of notice and compensation is not changing, just the requirement of prior permission is not required. And state governments are free to fix a higher limit. They can't put 100, they can go from 300, they can go to 400, 500 if they want. So this is the new requirement. A lot of labor unions are protesting against this because they're saying that this gives a easy right to hire and fire, liberalized right. And businesses are saying that this is a good move because it gives the freedom to a business to close industry or, hire or fire employees as per their business requirements. A new concept these new labor laws have introduced is fixed term employment. So currently what happens is there is regular employee, then there are contract laborers which are hired for certain specific through a contractor for certain specific period. Now what businesses can do is, let's say there's a project for 2 months or there's just 1 year of work or there's seasonality because of exports orders coming in. So you can hire employees for a fixed term, let's say 4 months, 5 months, 6 months, 1 year, 2 year, whatever. So for certain duration, you can hire them. During that duration, they are entitled to PF, ESI, and all the condition as a permanent worker. If you keep them for more than 1 year, they are entitled to gratuity also pro rata. Otherwise, gratuity is given to a person who completes 5 years. But if you terminate them, then on completion, then it's not a retrenchment compensation. You don't have to give them retrenchment compensation you would give to a permanent worker. So what are the benefits of this provision? That it gives ease of doing business. If there is a seasonal requirement, you can have employee for that particular requirement. It will increase your productivity. But there are also fears surrounding it. The organizations, the labor unions are protesting because they feel that only permanent workers are part of trade unions who get that negotiating power. Now, because it can happen that businesses will start keeping only fixed term employee, no permanent employee, or more fixed term employees, less permanent employee. If that happens, their collective bargaining dilutes. And the job security which a permanent employee has, that will also get diluted. So there are protests going on around this. So, but for the business, I feel it's a beneficial provision because it gives them the required flexibility to meet the needs. Another important or new concept they have introduced is a negotiating council. So in India, as of 2015, I'm talking of an old figure, there were 12,420 trade unions. So as a business, you had to negotiate with many trade unions. So now what they're saying is that if there are more than one trade union, then if there is just one trade union, that is the sole negotiating union. If there are multiple trade unions, then whichever union has support of 51% of total workers, which are on the roll of the negotiating union of the business, that is the union business has to negotiate. Once that negotiation is done, it's binding on all. But if, let's say, no union has the support of more than 51%, then they will set up a negotiating council basis the certain criteria. Each trade union will have a seat on the negotiating council. The employer will negotiate with that council, and whatever is the outcome will be binding on all. So from employer perspective, they have made it a little easy to do these negotiations, and decisions are done by majority here. Now we are moving to the compliance part, that what are the major changes in terms of compliances? Because in the earlier labor laws, there were multiple compliances under multiple laws. Now, first is the payday. So currently in many organizations, salaries are paid by 7th day or paid by 10th day of the month. That is what the most general trend is. And that was the previous law also was. Now the new labor codes say that you have to pay daily wages by the end of the shift. If someone is employed on weekly basis, the last day of the week, so let's say Sunday is off, so on Saturday you have to pay. And then if someone is employed on monthly basis, you have to pay 7 days from the end of the month. So paying salary on 10th is not legal, will not be legal anymore. You have to pay the salary by 7th day of the month. And as I said earlier, this payment of wages related rule applies to all who falls within the definition of establishment. So whether you are a CA office, you are an NGO, or even if you are one worker or one employee, you have to comply with all this. And the last what they've mentioned is that in case someone is terminated, you have to pay wages in 2 working days. Now, this means that the full and final settlement has to be drawn up and cleared in 2 working days. Now, this will require a lot of uh, review of internal processes, because a lot of times it takes time in drawing up the full and final settlement, getting NOC from all the departments, and then determining what are dues, what are not dues, deductions. But now the processes have to be done in such a manner that in 2 working days you are able to give FNF. The government has not clarified that what a lot of times, for example, company is given the, let's say, phone or laptop to an employee, he's not returned. So generally his FNF is put on hold. He's not given the money. But what happens, whether there are exceptions to it? Currently, as per the law, there are no exceptions, but we expect that such situations will be covered in rules and notifications. Working hours, majorly there is no change. It's as much as it was before. The only, you must have read new news articles saying that now even white collar employees will get overtime. Now, this controversy is because in the definition, the word employee has been used instead of worker in the draft rules, central draft rules. So, if that remains the same in the final rules, maybe even the professionals and white collar employees are also entitled to 2x of overtime. If not, only workers are, which in the previous law also they were entitled to overtime. In terms of safety, health, and welfare, the government is saying that it's mandatory to issue appointment letters. They have given a very small 1 page of format of appointment letter, which has to be given to all employees, because the data shows that almost 70 to 80% employees don't get any appointment letter. So to put things in black and white, they're saying that it's important and it's mandatory. And also, if for workers having age of more than 45 years, it's mandatory that the company gets a free annual health checkup for them before 30th of July. That is a requirement. And if you have more than 100 workers, then you have to set up a canteen for them for their food and everything. And if you have more than 50 workers, you have to provide crèche facility also. Now, earlier in the current law, the requirement is that if you have more than 20 to 50 female workers, you had to provide crèche. But now the new law says that even fathers can bring their children to work and put them in crèche. They're going towards gender equality. And therefore, it does not say 50 female workers, but it says if you have more than 50 workers, you have to have a crèche. So these are the new compliance requirement which will come. Another new compliance which they have put in is the worker reskilling fund. So in case someone is retrenched, so let's say we retrench someone, we're paying them retrenchment compensation as per the law, legal requirement. We also have to contribute 15 days wages last drawn to the government in the worker reskilling fund. This fund will be set up for training retrenched workers so that they can be re-employed somewhere else. And this amount will be given to them. So this is another financial burden which will come on the employer, because this is another amount they'll have to contribute. So these are some new compliances they have introduced. Now, strike and lockout. This is where a lot of controversy between a lot of issue has been. The many trade unions are representing the government that strike and lockout provisions have been curtailed down, because strike is a right given to the employee. They use this, they go on strike and they use this to bring the employer on the negotiation table to take note of their demands. Now, what the government has done is they've said there cannot be any flash strikes. You cannot do that, from tomorrow we are on strike. You have to have a mandatory 14-day notice period. Earlier, the law was such that only in public utility services, which were very important for day-to-day affair, only for those flash strike were prohibited. In other normal industry, you could do flash strike. But now, irrespective of public utility or not, government has said that no flash strikes. Flash strikes are not legal. There is a requirement of 14-day notice period. And only after this, you can do strike, so that the employer knows that strike is about to happen, and the employer can make sure that his business affairs are arranged in such a manner. Regarding contract labor, the applicability has changed. Earlier, the threshold was 20. If you are employing more than 20 contract laborers, then you also had to get registration, and the contractor through which you have taken the labor, he also had to get registration. And in many states, this was already increased to 50. But now, on the pan India basis, this is being increased to 50. And earlier, contractors had to take registration in each state. In Rajasthan government, you had to take one registration. With Labor Department of Punjab, you'll have to take another registration. But now there will be a pan India license. Then the labor suppliers, they can take a pan India license, and then they can supply labor. Now, the problem with, or why the law wants to regulate contract labor, is that basically, if contract labor, there is a easy hire and fire, because they are not on permanent role of the establishment. They are denied basic rights or basic social security protection. They are not given. For example, there was a data which said that from 2004 to 2017, the number of percentage of contract labor versus total employment rose from 25 to 36%. So while contract labor does give flexibility to as a business, but it also puts the labor, this flexibility comes with a lot of vulnerability for the labor. So now the government has come up with the concept of core activity. So employment of contract labor in core activity is prohibited. There are only certain exceptions to it. This concept of core activity was there in Andhra Pradesh. It was introduced in Andhra Pradesh in 2003. But now, for the entire nation, this has been introduced. So let's say you're a steel manufacturer company. So for your core activity, you cannot have contract labor. For, let's say, your canteen, you can have a contract labor. For your washing of for, let's say, your certain ancillary things, so cleaning, you can have contract labor. But for your core activity, you can't. But similarly, if you're a service provider who's there to provide food, so food becomes your this food becomes your core activity. You can't have for your core activity. So this is the new concept, and it mandates so it will decrease the percentage of contract labor in the entire business, and you'll have to have more people on your own roll. The new labor laws have also put certain limitations. So currently, what happens is that the limitations are very less. The law of limitation, normal law, does not apply here. So under the current labor laws, the employees can make a claim even after certain years. So what they've done is they've increased the limitation period. So in Code of Wages, it is 3 years. In IR code, it is 2 years, and in OSH code, it is 6 months. What they've also done is, like, how in income tax it happens that after a certain numbers of year, your assessment cannot be opened. That is not the case in the current labor laws. Like, as I said, when the Supreme Court judgment came in PF, even 10-year-old demands were made. even the companies don't even have documents at that who was the employee, how much PF contribution was given at that point of time. Because after 8-10 years, they don't even keep the books of account. So here, what they've introduced is the limitation of 5 years for initiating inquiry. So basically, 5 years before, after 5 years, everything is grandfathers. No inquiry can be initiated. And once the inquiry is initiated, it is likely to be concluded within 2 years. So now there is some visibility as to till when inquiry can be initiated and by what time inquiry will be then. So this is very good, and hopefully this will be better, and this will give some ease of doing business or some confidence to the investors also. These new codes have changed a lot of provision regarding offenses and penalties. So we'll discuss them. The role of inspector is being changed to inspector cum facilitator. Now, everyone is scared of labor inspectors. There's a lot of red tapeism and other consideration. And now what the government is saying that this inspector is not only there to inspect and tell you or make demands. His role is also to sensitize the employers as to how best you can make the compliance of the law. So he will also facilitate you in making compliances. So they're trying to change the narrative of inspector to inspector cum facilitator. A lot of penalties have been increased by 10 times because most of the labor laws were very old. They were around the independence era. So the penalties were monetary very less. So in the current economic terms, in current value, it did not deter. There was no deterrent for a business to make compliance. They were like, fine, 1,000 rupees of penalty we will pay. So now, instead of 1,000, the penalty is 1 lakh to 10 lakh for the first offense, and it increases if you make a second offense. And in most of the labor laws, the second time offense also involves an imprisonment provision. So I've mentioned certain penalties on the slide, but there are more penalties on in the labor laws also. So for example, if you miss on paying salary on 7th day, first time is just penalty, but if you do this for 2 months in a row, then imprisonment also kicks in. So it's very important that now there is the compliances of labor laws is taken very seriously. So these are some penalties. So for example, non-payment of minimum wages. So there is a penalty of 50,000 for first time, and in case you do it regularly, then 1 lakh or up to 3 months of imprisonment. And also if there is non-maintenance of registers which are given, then also the penalty is increased. The labor laws have also introduced the concept of compounding, which is there in Companies Act or other commercial laws. So which was not earlier there. So now many offenses which there is only fine, you can get them compounded. And there are offenses where there is fine and also imprisonment of up to 1 year. They can also be compounded. So this is under OSH, SS and IR code. And in wage code, offenses with only fine, they can be compounded. So you can approach the labor authorities and get these offenses compounded. So these are the new provisions. Now, relevance for CA. Now, chartered accountant, apart from their audit function, they have a big role they play as an advisor to the business, and they have a huge impact there. So to assess whether, how the cost is increasing and how that cost is to be met, their businesses need advice, and chartered accountants can play an important role. And again, cash flow of business is also very important because these labor laws will have an impact. As I said, gratuity is increasing, PF contribution is increasing. So all these have to be taken care of. Ease of doing business, the returns, because it's faceless return. So all that can be managed very easily by chartered accountant because they have a very good experience in it. And again, uniformity across nation. Now, because there are no multiple state laws, and most likely the state rules will be very similar. So even if you're sitting in Rajasthan, you can advise a business in, let's say, Chennai, or you can advise a business in Assam, and you can file their returns also sitting here. So it opens a lot of professional opportunity. As an auditor, the you're already required to comment on whether the business is complying with laws or not. So where you're commenting, the labor laws also come into picture. So you need to have a brief idea as to what are these laws and whether returns are being filed on time, whether contribution is being paid appropriately or not. And lastly, in your own office, because now you're uh, falling with the definition of establishment, you have to take care of these laws for your own office also. So on these aspects, these labor laws very important for chartered accountant also. Way forward for business, uh, as I said, we expect that after these general elections, anytime these labor laws can be notified by the government. So before these notifications come, and we don't know what is the time which will be given before the effective date is notified, those CTC structures have to be reviewed, whether they are in compliance with the current definition of wages, whether you're complying with the 50% rule or not, what is happening to your remuneration in kind. All that has to be reviewed. Then the current HR policies and contracts have to be reviewed, whether your HR policy is saying you have to pay wages on 7th or 10th day, whether it's in compliance with payment of wages or not, or whether you're saying that your full FNF will be done in 2 days. All that has to be, your policies, internal systems have to be reviewed. And then your cash flow, cost, liabilities, and working capital requirement have to be assessed, because the burden is increasing on the employer once these, because of the new definitions. And it's time to identify gaps and assess how ready you are for all these new labor laws. So that is it from my side, and we can take questions. Thank you so much for patient hearing.
Thank you. I will take questions from our audience. I think very few questions are there at present. May I? Am I audible?
Yes, Samiji.
Yeah. I will take question one by one. Whether the relief available from ESI or PF provision in case of subcontracts where maximum labor employee subcontracted who is not covered under said provisions, or where labor was daily wages who may work on permanently or a week. Further, is there any other way to cover by paying labor cess, etc.?
Sorry, you will have to repeat. I didn't understand the question.
Okay. Whether the relief be available from ESI/PF provision in case of subcontractors where maximum laborers are employed, subcontracted, who is not covered under the said provisions, or where labor was daily wages, who may work permanently or on a weekly basis. Is there any other way to cover overcome by paying labor cess, etc.?
So the current law says that if even if you are employing labor on through a contractor on a contract basis, you have to ensure that they're getting the same working condition or social security benefit as your permanent workers. So if you are paying EPF and ESI for your permanent workers, you have to ensure that the labor contractor pays it for your contract workers also. So I don't think there is any provision change in that provision in the new regime. It's the same as before.
Next question is, how will capping 50% of gross salary as a base for social security contributing help towards better investment when the minimum monthly contribution is set 1,800 or 12% of basic per month?
So this 50% rule is will impact more on persons who earn, let's say, less than 20,000 per month. Because if you know, in current PF regime also, there is a cap of 15,000 rupees per month. If you're earning more than 15,000, there's a cap of 12% of 15,000, that is 1,800 rupees. So the employers are not legally liable to contribute more than 1,800. You can stop your contribution to 1,800. So if that is the case, let's say the same limit is notified. So persons who are earning more than 15,000 will not be impacted by this 50% rule, and persons who are earning less than that will be impacted. But as I told you, like major percentage of workforce earns less than 10,000 rupees, so they'll be impacted through this.
For private temples, charitable trust, orphanage homes, whether the code is applicable of wages, etc.
So on code on wages, regarding, apart from payment of bonus, everything is applicable on the word establishment. And in my opinion, the establishment will cover these temples, public trust, or these Devasthan Vibhag registered temples and these NGOs also. Apart from this, the other codes, there are exceptions for, and there is a limit of number of employees. So there they can get some exemption, but these basic minimum wages, payment of wages, equal opportunity, they'll be applicable.
For counting number of workers, applicability purpose, whether total workers employed at all units of organization will be considered, or unit-wise applicability will be seen?
No, all units will be considered.
Okay. Last question. I don't think it is easy to answer for you also, but let me ask, what is the expected date of implementation of these codes?
I cannot answer that with certainty, but because the NDA government is very, it's one of their main agendas, and the dream of 5 trillion economy in my view, cannot be achieved without implementing these codes. So I feel as soon as the election results are out, and if the Modi government comes back in power, we can see a fast implementation of these codes. And if Modi government does not come in power, then we don't know whether these codes will be implemented or not.
Whether you have shared your presentation to ICI for sharing
Yes.
online?
Yes, I have.
Okay. So thanks, Harsha, on behalf of all the participants and ICI for sharing your wisdom of knowledge to all of us. We also expect your association with us in future. Thanks a lot.
Thank you. Thank you, everyone.